Alright, let's talk about some of the hidden and lesser known benefits of starting to invest when you're really young. And let's take a look at some of the changes that I made to my 7 million Swedish kronor growth portfolio. This is the main portfolio. And if you want this in American dollars, just divide by 10, so roughly 700,000 American dollars as I'm recording this video. This can change very quickly as we have Palantir earnings and Porch Group earnings coming up. So recording this video right before huge earnings week for this portfolio. In terms of performance, a majority of the results, 580k almost dollars, is from gains. So that means that I saved roughly $100,000 of this myself, and a majority of the value of the portfolio is just coming from pure trading gains over time from buying and holding. Yet, in terms of percentage result, we only see up 368%. Why is this? Well, then we're getting into the hidden benefit of starting young. So we can switch over to this view and see in terms of max view. This is going very far back here. You can see 2011. This is more than 10 years ago. Started with very little money, started with a custodian account, as you have when you're not 18 years old yet. And what was the first thing that young Andreas did? Well, you can see minus 21%. I'm trading, I'm reading the news, I'm buying and selling stocks, purchasing, for example, Endomine, buying different high leverage certificates here, 2013, down 43%. Doing all of those stupid things that you do when you're a teenager, but not just when you're a teenager, when you're unexperienced. A lot of people will do this when they first start trading. And here we come to the hidden benefit of starting to trade young, because you're gonna make all of these mistakes with very little money. You know, you're not gonna lose a lot. It's gonna be the paycheck that you get from summer holiday work painting fences. Oh, you lost $300, boo. You know, like a lot of people are gonna start investing later when they have a real big boy paycheck, and they're gonna lose a lot more in NFTs, crypto, meme stocks, all that jazz. I've seen people lose big paychecks on, for example, GME and Ape Stock. What was named that one again? AMD, I think, something like that. Just losing out massively. Well, I did this young, and I encourage young people also to try out all this, lose the money, and then when you see, all right, perhaps I'm not a genius that reinvented the wheel. Perhaps I can just look at a proven strategy and stick to that instead, and actually make money, like later on in life. So we can see that in terms of percentage, you know, only 400% up, but in terms of pure monetary gains in dollars, well, then a large majority of the portfolio is just pure gains. And that's what's happened when you start to put away a part of your paycheck, you know, as you continue to work, as you continue to make money, you know, you just put in a larger and larger paycheck, you earn more, but it also accumulates over time. And we get this exponential type of chart all the time when we're doing proper investing. For example, these peaks and valleys that I'm scrolling over right now in terms of value of the portfolio might look big now, but 5 years from now it's gonna look, you know, like more to the left on the graph, like these teeny tiny ones that look almost like a straight line if you zoom out from it. And it certainly does that on a normal graph where we just look at monetary value here. You can see, for example, here in 2012 minus 537 krona minus 10%, you know, that's $50 minus $50, that's minus 10%, you know. So start trading young, start doing all of those mistakes when you're young, and then as you continue to work, you continue to actually have a real strategy that you can stick to, that you put your real big boy paycheck into, well, then you're gonna get the large exponential spike. All right, so what are some of the changes that I've done in my portfolio? No change to Porch Group, no change to Palantir. We see Reddit coming up on place number 3. I sold the Google shares that I got vested from working there and decided to buy 60 more Reddit shares ahead of earnings. Already bought when the stock was below $100. Now it's trading a lot higher. I will continue to buy more of this stock. I think it's still undervalued. I think it still has above market performance to give. So I will put more money into Reddit. And you can see that cash on hand, this is roughly $10,000, something like this. 0.66% of the portfolio, so I have some cash to put in. And then Reddit number 3, StoneCo, still holding on that one. Still a lot of risk, still waiting on my gains. No plans on changing, but Bauch Health Companies has the potential to be cut here. I need to do some more research on that for sure. But, you know, as I always do, there's no rush. I talked about changing up Google, selling it months ago. And I was reminded after the earnings call, and I made a note, you know, a voice note for you guys on Discord on, you know, now I'm selling it, now I'm buying Reddit. And the reason was quite simple. They had a slight beat on earnings, some overperformance, a lot of capex, which was not the best, but despite beating on revenue, stock price, it's just not going to give you good results when they have that big of a market cap. You know, it's like they need to do a lot. They need to do something absolutely crazy with AI or something like this to get amazing stock performance. Whereas a smaller company like Reddit, like Porch Group, like Palantir used to be before they went up massively. Now they're going to have a harder time to scale, but I still think they can do above market performance. But for example, with the Google case, you know, they're up 2%. You know, it's not good enough. It's not the type of risk that I want in my portfolio. So that was just a reminder, the earnings call, that all right, it's time to sell this. It's time to buy something more volatile that can actually make more of an impact on my personal finances. And in this case, it was just easy to buy something that I understand. I have a few videos out on Reddit now where I talk more in detail on why I think this stock will overperform. We see Medical Properties Trust. This is the first time that I bought this stock a long time ago, and they dipped massively, continued to buy in the other dividend portfolio in this case. As a result, got a great price. So it was a company that I liked at almost $6, and then when it dropped by a lot, well, then I bought a lot in the dividend portfolio. They also had earnings. They did just fine. Despite that, no major changes in terms of stock price. It's still a lot of risk baked in, especially with the healthcare sector having a bit of a wet blanket over it. A lot of the major health insurance providers, some of the hospitals, they are not really performing that well. Just look at United Health Group, for example, down by a lot. And this is affecting the whole sector. So just as they started to recover nicely from the bankruptcy of Stewart, now we have this wet blanket again. And that's the thing with investing, just waiting, you know. You have a thesis, you have a plan, You have a scenario where you think the business is gonna go, and then stuff happens. Just take a look at StoneCo, for example. All right, people are gonna use less cash in Brazil to pay for goods and services. We're gonna use credit card more, and all of a sudden we get very, very unstable politics, and the reais devaluing massively from 5 reais for 1 euro from the last time I was there, and 6 reais for 1 euro, something like that, at the time of recording this video. And with the money printing that they are doing, I'm quite certain it will be 7 reais for 1 euro in the near future. But does that necessarily mean that the company will face massive headwind and not be able to continue to grow? No, not necessarily, but yes, it warrants stock price not going higher. It's completely fair to not want to buy into a company and operating in a shaky economy. I think that investors, especially when we have good interest rate on government bonds, are going to put the money there instead. And then perhaps as we get interest rate cuts, well, more money is going to flow to equity, and companies such as, for example, medical properties trusts, which acts a bit as a equity bond almost, you can say. They do big dividends. That's not reflected in this number, by the way. They've paid out a lot of money to shareholders, and share price drops by the same amount as the dividend is. But that's going to be a boost for companies like that. And it's also going to be a boost for riskier companies such as StoneCo, for example, because, all right, now we have more risk appetite in the market, and we need to search riskier markets, riskier stocks to get those gains, get those investor returns. In terms of getting a nice risk to reward ratio, I think that Reddit is perfectly positioned right now, just starting to get that profitable growth, having the biggest growth that they've had in 3 years. And also they have a lot of room to grow just looking at the business. I made a separate video about this, talking about international growth, talking about growth and measurement, the ad units, all of this. There's a ton of things that they can do in the space. And if we're honest with ourselves, I use Reddit, for example. I can see one of the red flags for the platform being the moderators being a bit too strict, and this could dampen user growth, them banning people over unnecessary comments. Well, of course, that's a bit of a risk on growth, but it's something that could be mitigated with, for example, AI, if they do the moderation instead. So they stand to gain from the AI revolution as well. And of course, it could also help produce more content on the platform. Will it be a lot of AI slop that people will dislike on other platforms? Well, perhaps they go to Reddit for more honest human, opinions, not just to get the facts, but to get the discussions as well. There's a lot of potential underlying trends that can boost stock price of Reddit by quite a lot. So quite the interesting growth portfolio, very, very high risk still. I plan on changing this as I get closer to retirement date. But as for now, you're getting a risky growth portfolio, make money a bit faster portfolio. All right, that's been it for this video. And as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.